The market shrugs off any geopolitical tension and the attack from Iran on Israel. And the reason why the market is not doing anything because of this massive increase in geopolitical tension is because everyone is discounting monetary destruction and rate cuts, i.e. the market is basically just shrugging off geopolitical risk because it perceives that there will be more monetary debasement, and these graphs, courtesy of Bloomberg, show it. Number one, Bitcoin. Bitcoin declined significantly on Saturday on the news of the attack of Iran, but recovered, and we have seen how the Tel Aviv Stock Exchange and also most of stock exchanges have been shrugging off the geopolitical risk. That is one indicator that everybody is thinking about monetary destruction. Let's go to the next graph. If we look at the next graph, that is exactly what the market is expecting. This courtesy of JP Morgan shows how lending standards are what people are looking at in order to see a more positive outlook on the economy. And that is basically more money creation, more artificial money creation, lower rates, i.e. a higher debt bubble. Let's go to the next graph, which shows us why the market is discounting monetary destruction. The dollar relative to its trading currencies. The dollar relative fundamentally to the euro and the yen, which is the DXY index, shows that the euro and the yen are much weaker than the US dollar. Yes, the US dollar is losing purchasing power via inflation, of course, but it is strengthening its position as a world reserve currency because the euro and the yen are weakening, particularly if the ECB decides to cut rates, which would be an insanity when we have the example of the Bank of Japan leading the yen to 35-year lows relative to the US dollar. Monetary destruction, not just happening on the euro and the yen, but most fiat currencies relative to the US dollar, and the US dollar losing its purchasing power through persistent inflation. Let's go to the next graph, which is gold. Gold is also showing us monetary destruction. Monetary destruction, even in the outcome of geopolitical tension increases. And gold is discounting that there will be not just rate cuts, but monetary debasement after the insane deficit spending that many countries are going to incur in an election year. Let's go to the next graph, which shows us the insanity of the current situation of the United States. Look, this massive increase in debt and massive increase in government spending has led to a heating of the US economy that's bloating GDP, but it's not improving gross domestic income. However, once there's a little bit of, let's say, sanity in the budget, and once consumers start to see the challenges that they're suffering due to inflation and the increase in debt, the likelihood is a much weaker level of growth and a much more logical level of growth. The insanity was this: massive bloating the GDP with huge increases in debt. And let's look at what China is doing at the same time. In the Bloomberg projections for the United States, we have seen a moderation, and they're talking about no soft landing. Let's see, it may be, or maybe it may not be. But China, growing 4.5%, more or less, around 4.5 to 5% in an environment with no fiscal stimulus and no monetary stimulus. China does not need a fiscal stimulus. China does not need a public stimulus, because that public stimulus is precisely the reason why it was weak in the first place. That is why the growth was unsustainable, and that is why this is a much more prudent approach. So, what all of this shows is that what the market is currently discounting is monetary debasement, that geopolitical risk is being ignored because the destruction of the purchasing power of fiat currencies overrides all other factors. And that's why the market prefers to look at those elements, and that's why we need to be more invested in hedges against monetary destruction, hedges against persistent inflation, and hedges against the debasement of currencies. Keep defending freedom.
Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.